Joining us now for more on the markets and the election, Jeff Kleintop. He's Chief Market Strategist at LPL Financial. So, Jeff, I'm sure a lot of people are asking you, is Obama or Romney better for the markets? And what do you say? Who's better for stocks?
Well, it's a complex answer because it really matters what the whole complexion of Washington looks like. It really comes down, in many cases, to who wins in the Senate. Do we have a GOP sweep with a Romney win, or do you still have a Democratic Senate? That could really change the complexion of what this lame duck session looks like, and the status quo election outcome may lend itself to actually a relatively quick resolution in the lame duck session. So a lot depends not just on who wins in the Oval Office, but what the next 2 years in Congress looks like.
All right, so talk us through that. Let's say President Obama wins re-election, but you have Republicans who are dominating in Congress. What does that mean for the stock market, and vice versa? If Romney becomes President Romney and he has a Democratic Congress that he has to grapple with?
Yeah, well, I'll start with the second one first. If Romney has to deal with a Democratic Congress, really meaning a Democratic Senate, the House probably stays in the hands of Republicans. Very unlikely to craft a deal in a very short amount of time. Remember, we've got this fiscal cliff hitting next year, and we've got a lame duck session where a lot of that needs to be dealt with. Could be very difficult. For example, unlikely to see President Obama, as his last act in office, sign a full extension of the Bush tax cut. So very likely we may go over the fiscal cliff in that scenario, only to try and claw our way back out of it early next year, but it could be very difficult to do. That could be a negative scenario for the markets. Maybe a more positive one is a status quo election outcome, where at least you know who the players are going to be and you know generally what the terms are. They'll likely come to some agreement on mitigating many of the big negative aspects of the fiscal cliff before year end. That could give markets the clarity they need. So a little bit of caution now, but maybe later as a resolution is formed later this year, we finally start to see a beginning of a rally and a return to the markets by investors.
And where does the economy fit into all of this? Does the economy just continue to limp along, whether it's President Obama who wins or Governor Romney? Is it going to be the same?
Very likely. Well, you know, as long as they come to some type of agreement over the fiscal cliff, then yes, you're probably looking at a 1 to 1.5% drag on GDP, which is pretty much how fast we're growing now. So that brings us pretty close to the flat line for profits and for the economy. But if we don't craft a deal, if some scenario coming out of this election doesn't lend itself to a quick and easy compromise in the lame duck session, which it may not, that means we have an economy that's really hit with a full brunt of the fiscal cliff, some 3.5% drag on GDP. We're most likely in a recession in that case, with further pullback in spending and housing maybe, and a far deeper downturn.
All right, a lot of variables, a lot of factors as you've just been talking about. How should people position their portfolio? Is there a pre-election trade to do here?
I think you can lighten up a little bit, have a bit of cash, I think makes some sense now, along with maybe some precious metals like gold, and then look to take advantage of any of the pullbacks here in the next couple of months on this infighting in Congress. I'm reminded of when we tried to increase the debt ceiling back in August of 2011, how that led to a 13% rapid decline in the stock market. Though we did ultimately increase the debt ceiling, we could see something along those lines. But depending on the outcome of the election, we could see some industries fare better than others. For example, Romney mentioned coal several times in the debate. Coal stocks are up 25% since the first debate. That could continue if Romney wins. Likewise, better performance out of HMOs and maybe some of the big banks. On the other side, an Obama win might mean better performance for some of the food and staples retailers on an extension of unemployment benefits, and some of the beneficiaries of the Affordable Care Act that's likely to remain in place, like healthcare facilities such as hospitals and some of the diagnostic labs and other healthcare services companies.
All right. A lot of good information, Jeff. Thank you so much for coming on the program. Jeff Kleintop, he's Chief Market Strategist at LPL Financial. Thanks, Jeff.